Hello, welcome to Business Incorporated. Thank you for joining me. I am Bolaji Akinwale. This week on the program, we will be taking a look at the capital market, the issues and the challenges of the past year, not just the past year, even the past years in the market, and how 2015 may play out. And also, we'll be taking a look at how the regulators in the market developed the capital markets. My guest is Femi Awoyemi. He is the CEO at Pt.1 Nigeria. He will be talking to us on these issues and how 2015 may play out as we move on. But before we bring in Femi to talk to us about the issues in the capital market, let's take a look at some headlines. Reports say the Assets Management Corporation of Nigeria would commence the sale of Keystone Bank in the second quarter of this year. This came barely 4 months after the bad debt manager completed the sale of Enterprise Bank and Main Street Bank, two of the three nationalized banks. The Chief Executive Officer of ANCOM, Mr. Fachikilby, stated that the February-January elections had made the corporation to delay the sale of Keystone Bank to the second quarter of the year. AMCON had, during the last quarter of 2014, completed the sale of Enterprise Bank and Main Street Bank to Heritage Bank and Sky Bank plc respectively for a combined sum of 181.1 billion naira after bidding processes that lasted for several months. Heritage Bank won the bids to acquire Enterprise Bank for 56.1 billion naira, while Sky Bank was announced as the winner for Main Street Bank with a bid of 125 billion naira. While Heritage Bank won the bid for Enterprise Bank, Fidelity Bank emerged the reserved bidder after a bidding process that involved over 20 buyers. The federal government has directed all its ministries, departments and agencies to close the revenue accounts with deposit money banks latest by the end of February this year. The government gave the directive while unveiling an electronic revenue collection platform aimed at checking theft, diversion of collected revenue, and all sorts of corrupt practices associated with revenue collection. The balances in the revenue account, as stated, should be transferred to the Consolidated Revenue Fund of the federal government. It warned that any MDA that failed to comply with the directive by the end of February would be appropriately sanctioned. The implementation of the project began on January the 1st this year, and that it was meant to enthrone a new regime of centralized, transparent and accountable internally generated revenue management system. The House of Representatives had, in an investigative report on unremitted revenue last year, said the 60 revenue-generating agencies of the federal government failed to remit over 9.4 trillion naira to the coffers of the government between 2009 and 2012. The Nigerian capital markets was described as one of the worst performers for 2014. What factors led to this latest status? In this report, we'll take a look at the developments in the capital market for 2014. The capital market plays an important role in an economy, and that of Nigeria is not an exception. Over the years, the Securities and Exchange Commission has played a major role in regulating the sector. At present, the Nigerian capital market is reputed as one of the best in the world. Although the equities market did not perform up to expectation last year, foreign and local investors have more confidence in the capital markets today than they did years back. Year 2014 was an eventful year for the capital market in Nigeria. One, the country was admitted to the World Federation of Exchanges towards the end of the year. And just like other countries, the effect of the slump in the international crude oil market took its toll on the country. Towards the end of the year, the price of oil now trades around $50 per barrel. The market faced the challenges of investor apathy, lack of confidence, and cautious trade during the year. A number of state governments came to the capital markets to raise funds. Experts are of the view that owing to the fact that they are almost at the end of their tenure, they were not approved to raise capital. The deadline for recapitalization for market operators was postponed to the end of September 2015. This move was described as a laudable one, going by the downturn in the market and the challenge of illiquidity. The tenure of the Director General of the Securities and Exchange Commission, Ms. Arumaute, ended at the end of 2014. There are speculation that she may be reappointed to the office for another 5 years. As 2015 begins, expectations are high that the markets will be revived. However, this may be determined by the economy, the price of crude oil in the international markets, and efforts by the regulatory authorities to employ measures that will yield the needed fruits. You're welcome back. I'm now being joined by Femi Awoyemi. He is the CEO at Persia, Nigeria, and we will be talking about the development in the Nigerian capital markets for 2014 and how 2015 may play out, and more particularly is the regulation in the marketplace. Thank you, Mr. Awoyemi, for your time with us on the program. First of all, I'd like us to review the activities in the capital market for last year. What's your view about the development in the markets?
2014 was a year in which we were hoping to build upon what we achieved in 2013, the moderately reviving market, after we bottomed out in 2012. However, the market is not immune from the economic realities that ensued, and there are about 4 or 5 major significant developments in the market that affected that. The monetary stance on the central bank, the economic conditions in the economy, and to the end of the year, the fall in oil prices. Perhaps the fourth is the political climate, a pre-election year, and naturally you would expect some level of adjustment. But then we ended up with a moderately weak market with about 34,000 basis points by the end of the year. And in this year, as we move into this, as we head into this, there's not so much hope for optimism that it would naturally affect, because what you see happening in the market between December now is what you would call a dead cat bounce. And we basically would end up having to go through this election, and the market would still assume a bearish posture as it's done all the way for the first quarter and perhaps into the second quarter.
What's your assessment of the regulations in the capital markets in the past year?
In terms of regulation, I think there's some aspect of the market we seem to have gotten right. We have, in the whole, we have raised the bar. We may not be at the exact point where we think it's utopian, but we've raised the bar successfully. And you can see both from the Nigerian Stock Exchange and the Securities and Exchange Commission, they have, working both individually and collectively, they have encouraged a better feeling in terms of confidence in the market, in terms of adherence, supervision, in terms of enforcement, in terms of follow-through. It may not be perfect as in all cases, but it has been consistent, it has been steady, and it's a major, major departure. Also, in terms of the global and regional exposure that the regulator has taken the Nigerian market to us in terms of joining different, including the World Federation of Exchanges. It's therefore meant that we had to subject ourselves to more higher standards in terms of corporate governance and what have you. That said, the challenge of regulation in a risk management environment and under an economic difficult condition will be really tested this year, whereby companies would have to find ways to survive, and then you need the regulators to step up their game, and you then will be hoping that to see or sustain what we've had. But if you really want to know what we've done in terms of regulation so far, I think Nigeria has basically been inching up steadily over the last 4 years.
I'd like you to comment on the postponement of the recapitalization deadline for market operators to September.
You will notice that about 262 persons have complied, entities have complied up to that moment, which meant that the industry as a whole understood it has to take a step forward and align with what the SEC is requiring. And though there are quite some challenges in terms of some people believing that why do we need all that capital when we're just doing trading, we're not holding cash for people. But if you look at our experience and coming forward, and you would understand where the Securities and Exchange is coming from. My take on it is that the extension was necessary, given the economic hardship that was going on, given the issues that mergers which they expected to take place may not be able to take place, given that the ability for people to raise funds in a very difficult time like this is necessary. That's why they gave it about 9 months. At least give the 6 months of the election, post-election settling down period, and about 3 months for the organizations to align. And I think the industry accepts that as a very wise decision by the SEC board. But I believe that most of the key players have complied up to now, and I'm sure the latest information made available on the SEC website shows that a good number of fund managers, portfolio managers, and dealer brokers have complied. It will be necessary to see how SEC also sets up incentives to help those who may struggle to comply. But guess what? The industry is changing, and its mode of practice is changing, and I believe that by the end of the 9 months, all things being equal, we should be able to round up that aspect of it.
You talked about incentives. What kind of incentives do you think that the SEC should give operators to enable them recapitalize?
There are a couple of things you have to look at here. In the first place, an averagely good stockbroking firm should have a very efficient research department, a good technology platform under which you can serve people without necessarily having branches all over the place. It is also important that they do have the ability to raise quality staff, to invest in training of those staffs, and the Securities and Exchange Commission can help in facilitating by encouraging those who have a few challenges, to encourage them to meet with those other ones of like minds who may not necessarily on their own may want to approach each other, and create the conditions for them to talk and have conversations and see how they can come together. You know, the major challenge is that most of all these entities are either owned by 1 or 2 persons. And as such, they need to create that comfort. Say, look, we can help you bridge the trust issues you have in the market. And it's something they have to do, and say that it's not just to give a regulation and build a big one, they can also help move the process forward. They are not obliged to do so, they're not, but then it's a fair deal if they should do so.